Welcome to the AI Applied podcast. I'm your host, Jaden Schaefer. Each week, I cover breaking AI news, tools, and interview experts giving you actionable tips on applying AI into your career, job, workflows, and life. Make sure that you go to aibox.ai, link in the show notes, to join the waitlist for our new AI platform. We're going to be launching an incredible platform that allows you to build anything you want with workflows in AI. So you're able to chain together ChatGPT and image generators and audio generators to make really powerful apps for your organization, or you can host them on our marketplace and actually generate royalties from them. So make sure to go to aibox.ai and join the waitlist. In addition, if you like the podcast, if you could do me a massive favor and please leave us a review on Apple or Spotify or wherever you listen to your podcast. This helps me be able to get better guests on here as they check the reviews to see how you guys are liking it. So if you could please do that, I would really appreciate it. Everybody knows that AI is the hot topic when it comes to investors and when it comes to, venture capital, what is being built and backed right now. But it's kind of hard sometimes to quantify what exactly that means, what exactly that looks like. So today on the podcast, we're going to be diving into some recent reports, some numbers, and breaking down just how much AI has proliferated into the market, how much money is going into this sector, and how much we expect this industry to grow into the future. So without further ado, let's jump into it. Swiss banking behemoth UBS Financial Services recently put out a report with a lot of really interesting statistics in there. Essentially, one of the main things is that they anticipate a very massive rise in demand for artificial intelligence over the next 5 years. So in an analysis note issued on Tuesday, UBS increased its guidance for long-term AI end demand, and they forecasted from a 20% compound annual growth rate for 2020 to 2025, and they have now increased that to an impressive 61% compound annual growth rate between 2022 to 2027. So obviously that is more than triple what they were previously predicting. And I think that's, really showing, obviously AI isn't this new thing. It's not like we just, this crazy new invention came out and all of a sudden we're going to be building a lot of things. AI has been a really impressive technology for a long time. And of course, ChatGPT going super viral kind of brought that to the forefront for a lot of regular consumers. And because of that, I believe for a lot of venture capitalists and investors. But despite that, the technology has always been very useful, and it's very integrated into everything, and it has been for the last 10 years. So the fact that just, this year we've decided to triple what our forecast on the usage, I think really speaks to kind of a paradigm shift and an overall market trend that we're going to be seeing in the future. UBS's Global Wealth Management Chief Investment Officer, America Solita Marcielli, noted, this is what they said: "We don't think AI is a bubble given clear use cases and solid long-term visibility, but recommend investors consider companies with clear monetization trends." So the announcement really reinforces, I think, the financial potential of this massive industry and this massive sector. AI enterprises have significantly contributed to the global tech market capitalization, which has seen a $6 trillion growth year over year, with AI-related enterprise providing a $2 trillion chunk of that. Which, some people might say, hey, that's only 30% of that. But like, if you think of every industry on the planet and 30% went to AI, that is a pretty significant chunk. So, people are asking, is AI kind of the new gold mine? What does this look like? So according to UBS Global, AI demand is going to balloon from 28 billion in 2022 to a staggering 300 billion by 2027. And the firm pinpoints two critical components of the AI sector: an infrastructure layer and an application and data layer. So while the bulk of current expenditures are in the infrastructure component right now, there is an emphasis on building and training vast data sets. The application and data segment is predicted to grow over the medium to long term. So Marcelli believes the sector will expand thanks to the innovative use cases of generative AI technologies like copilots, imagery, and also big data analytics. And this is what Marcelli specifically said about that. Significant opportunities over the next few quarters include AI copilots in office productivity software, rising demands for big data analytics, and AI integrations in image, video, and enterprise applications. So In the analysis eyes, the applications and data sector could bring in $170 billion in revenue by 2027, and that's compared to $130 billion for the infrastructure layer. So actually, the infrastructure layer won't be bringing in as much, according to their predictions. And that, they said, has a compound annual growth rate of 139% and 38%, respectively. So UBS suggests investors shift their focus to the AI software ecosystem, warning that infrastructure-related businesses like NVIDIA currently have high valuations. And this guidance comes even as NVIDIA kind of announced plans to make its cloud-based AI supercomputing software service, GDX Cloud, widely accessible, right? So a lot of people are very bullish on NVIDIA because of that. So, when it comes to kind of shaking the money tree and investments that are kind of currently pouring into AI, I think despite macroeconomic uncertainties and increased interest rates that we're seeing, in the US, but also globally, I think investments in AI remain really, really strong. So last week, German software giant SAP disclosed, direct investments into 3 AI startups, Cohere, Anthropic, and Alpha. And this move followed, Microsoft's obviously $10 billion bet on OpenAI in January. I think, interestingly, a PitchBook and Collision survey revealed that 74% of global VCs invested in AI or machine learning startups over the past 18 months, and 14% claimed to have made more than 6 investments in this area. So this is obviously a very hot area and a very big area of focus. So according to research by McKinsey, the number of companies that are utilizing AI has more than doubled since 2017. And of course, those numbers are a little bit old because I'm almost certain if when this poll is redone, halfway through this year or even at the end of 2023, this is going to be some massive shifts, as I believe virtually every company will be using AI. A vast majority, even electricians and plumbers are going to be using this to write, if nothing else, blog posts and marketing content. Every single industry, graphic designers, interior designers, travel agencies, like every sort of business and industry you can imagine will be integrating AI tools and AI workflows into what they're doing. So I see that number expanding significantly on the next survey. Venture capital funding globally dipped almost 15% or 50% in H1 of 2023, and that's according to data from PitchBook. But still, AI startups saw over $40 billion investments in the past 6 months, including, of course, people say that a lot, like, oh man, $40 billion investments in the last 6 months. But I think we also need to remember that part of that is Microsoft's $10 billion into OpenAI. So there's 25% of it. And then, of course, $1.3 billion went to Inflection AI. And so I believe that, the kind of overall industry decline doesn't seem to have really deterred investors, with nearly 68% claiming their investment pace over the last 18 months is near normal. But I also think that that's a self-reported, and you're definitely going to find a lot of VCs and investors saying, no, we're just doing a normal investment pace. They don't want to say like, oh no, we've slowed down, because it's going to make their firms look, weak or seem like they're not able to raise their next round. So I think there's also that kind of psychology behind that 68% response. So a lot of people have been asking, are we going to see a promising second half of this year? Economic challenges and rising rates obviously have left a big mark on the overall industry. And I think as investors and companies kind of navigate a world of higher interest rates and fewer exit opportunities, I think they become a little bit more selective right now, which I don't think is necessarily a bad thing. Obviously, the market in the bull run, in my opinion, was absolutely it's unconscionable. Companies received money that never should have. Some really big plays were made that shouldn't have. We've seen a lot of shareholder value that was not returned during that kind of time frame and from companies in that time frame. And so I think that maybe pulling back a bit, was definitely healthy for the economy overall. So I think a considerable decline in the number of deals across all stages has been seen, with the first seed round seeing a 44% drop in the US. So I think despite that, many companies likely are going to run low on cash by H2 of 2023. And I think that the market may see a moderate pickup in demand as Mary Donfrido, a partner at Bessemer Venture Partners, puts it. She said, more companies will need to come to market to fully finance their plans. So I think this kind of robust outlook for AI amidst, these economic challenges that we're currently seeing underlies a really critical role that AI is going to play in shaping the future and also in the market overall in general. I think companies and investors are betting really big on AI right now. And I think that is going to bring a lot of big technological innovation and adoption. And I will have to agree with what was said about the AI and what some people are calling the AI bubble. I specifically have to agree with Marcelli when it was said, we don't think AI is a bubble given clear use cases and solid long-term visibility, but recommend investors consider companies with clear monetization trends. I think if you're looking at companies with clear monetization trends, and I think that is the way to go. I think that, of course, AI is very, exciting and new right now, but I think with its real world applications and use cases and the ability that, we've literally seen how much money this is saving companies, how much more effective this is making employees. I fail to see this as the same kind of bubble we've seen in other asset classes with even Web3 and crypto. I think AI is a different player, and I'm really excited to see where this industry goes and the technological advancements we see because of it. If you are looking for an innovative and creative community of people using ChatGPT, you need to join our ChatGPT creators community. I'll drop a link in the description to this podcast. We'd love to see you there, where we share tips and tricks of what is working in ChatGPT. It's a lot easier than a podcast, as you can see screenshots, you can share and comment on things that are currently working. So if this sounds interesting to you, check out the link in the comment. We'd love to have you in the community. Thank you for tuning in to the AI Applied podcast. Make sure to rate this wherever you listen to your podcasts and have a fantastic rest of your day.